Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate finance and financial reports with a touch of sarcasm and a whole lot of clarity. Today we are diving deep into Nordson Corporation's latest proxy statement. And let me tell you, it is packed with some juicy details about executive pay strategy and what the board has been up to. You might be thinking proxy statements are dry, but trust me, there are some serious dollars and decisions in here that affect every single shareholder. Stick around as we decode it all and give you the lowdown. And before we jump in, if you are all about getting the real story behind these corporate filings and appreciate plain English analysis, make sure you subscribe and hit that notification bell. We also have our Discord community linked in the description below where we discuss these topics further, so come join the conversation. So Nordson is holding its annual shareholder meeting on the 2nd of March 2026 virtually this year. That means you can attend online, but you won't be able to show up in person. They are asking shareholders to vote on electing 3 new directors, ratifying their auditor Ernst & Young, and approving the compensation of their top executives. They also want shareholders to know that they are setting a record date for folks who get to vote, which is the 2nd of January 2026. Basically, they are telling you, hey, this is what we are doing, this is what we want you to approve, and this is how you can do it. Now let's talk about the people in charge and how much they are being paid. Nordson has 6 named executive officers for 2025. The big boss is Sundaram Nagarajan, who is the President and Chief Executive Officer. Then you have Daniel Hopgood, the Executive Vice President and Chief Financial Officer. Joseph Kelly is an Executive Vice President. Jennifer McDonough is the Executive Vice President, General Counsel and Secretary. Srinivas Subramanian is another Executive Vice President, and Stephen Lavas is a former Executive Vice President. These are the folks whose compensation is a major topic in this report. Let's get straight to the numbers, the part everyone really cares about. For 2025, CEO Sundaram Nagarajan pulled in a total compensation of over $8.1 million. That is made up of a base salary of nearly $1 million, then stock awards worth over $3.5 million option, awards worth over $1.5 million, and incentive compensation of about $1.3 million. That is a lot of zeros, but it is how these top executives are compensated. Daniel Hopgood, the CFO, took home just over $2.2 million in 2025, with Joseph Kelly not far behind at over $2.6 million. It is clear that the bulk of their pay is tied up in stock options and awards, which is a common practice designed to align their incentives with shareholder interests. Looking at the average compensation for the executives who are not the CEO but are still top brass, the numbers are also substantial. For 2025, this average was over $2.1 million. It is clear that these companies believe in rewarding their top talent handsomely with a significant portion of their pay linked to the company's stock performance and overall financial results. The report also shows adjustments to these numbers to reflect what is actually paid versus what is reported in the summary compensation table. For instance, in 2025, the compensation actually paid to the CEO was about $7.1 million, while the unadjusted reported number was over $8.1 million. These adjustments often account for changes in pension values and how certain equity awards are treated, which can sometimes make the actual cash received look a bit different from the accounting reported value. Now let's connect this pay to performance. We see a chart showing total shareholder return for Nordson and a peer group index. In 2025, Nordson's total shareholder return was around 127%. This means if you had invested $100 at the start of the period, that investment would have grown to over $227 by the end of 2025. This strong performance aligns pretty well with the compensation paid out to their executives, especially when you consider how their performance share incentive awards are tied to metrics like earnings, per share growth, and return on invested capital. The company also provides descriptions of how pay relates to performance. They explain that their CEO's compensation is directly tied to financial metrics like earnings, per share growth, return on investment, and EBITDA margin. When these targets are met or exceeded, compensation goes up, and when they miss targets, compensation goes down. This is the essence of pay for performance, which is what shareholders generally want to see. They are trying to ensure that the people running the company are incentivized to drive profitable growth and create value for shareholders. Digging a bit deeper into the long-term incentives, we see a 3-year performance share incentive award for 2025 to 2027. With this award, the number of shares an executive gets depends on how well the company performs on earnings, per share growth, return on investment, and EBITDA margin over those 3 years. For example, Sundaram Nagarajan, the CEO, has a target of earning over 12,000 shares with the potential to earn up to almost 25,000 shares if the company really knocks it out of the park. If the company falls short of targets, he might get closer to 6,000 shares. This is a significant portion of their compensation and shows a strong focus on long-term success. Now for the nuts and bolts of how this all works. The report clarifies how shareholders can vote whether they are a record shareholder or a beneficial owner, meaning if your shares are held by a broker. They explain the deadlines for voting by internet, phone, or mail, and crucially how to attend the virtual meeting itself by registering at proxydocs.com/NDSN. They also touch on broker non-votes, meaning if you don't give your broker instructions on how to vote your shares, those shares might not be voted at all for certain proposals. This is super important because it can impact the outcome of votes. Let's also glance at some of the key financial figures. For the 12 months ending the 31st of October 2025, Nordson reported record EBITDA of over $899 million, up from over $849 million in the prior year. That is a strong increase. Net income for the year was over $484 million. They are also proudly highlighting their free cash flow, which was $661 million for 2025, representing 136% of their net income. This shows impressive cash generation capability. Looking at these numbers, Nordson seems to be performing quite well. Their revenue and EBITDA are hitting records, which is fantastic. The fact that their free cash flow conversion is so high is a great sign of business health and makes them an attractive investment. Their executive compensation structure is heavily weighted towards stock awards and performance-based incentives, which generally aligns well with shareholder interest. However, the sheer size of these compensation packages, especially the stock awards and options, can be a point of contention for some shareholders if the company's performance doesn't always match up. On the flip side, the report does mention some risks, including cybersecurity threats and potential disruptions in the supply chain. While these are common risks for most manufacturing companies, Nordson's reliance on technology and global operations means they need to stay vigilant. Their governance structure appears strong, with a majority of independent directors and independent chairs for key committees, which suggests good oversight. So what is the verdict for Nordson? Financially, they are on a strong upward trajectory with impressive revenue and cash flow generation. Their executive compensation is designed to reward performance and long-term value creation, which is generally a positive. The company seems to have a solid strategy in place. The key for shareholders is to keep an eye on whether the company continues to hit its ambitious performance targets to justify these high levels of executive compensation, and to monitor how effectively they navigate the inherent risks in their industry. Alright, that is our deep dive into Nordson's latest proxy filing. What do you think about their executive pay and financial performance? Drop your thoughts in the comments below. If you found this breakdown useful, please hit that like button. It really helps us out, and subscribe if you want more decoded corporate insights. And don't forget to join our Discord community linked in the description for even more discussions. Thanks for watching, and see you next time.